Hello traders, welcome back to the channel and I hope you really had a nice and good weekend. So markets are going to be consolidating and going forward also markets are going to be consolidating, and I told that in last 2 or 3 videos. In fact, last week video I told that markets are likely to consolidate and markets are not likely to come down. It is going to further go on the higher side, and that is what has happened. And the main reason why it has gone on the higher side is because of US federal or US Treasury has got the approval from Congress and they have increased the debt ceiling. Right now you have to understand there is pros and cons about this debt ceiling. Now market may not go on the higher side and you can expect unwanted movements or unwanted gap downs or unwanted gap ups in the market, and there is a reason why it shouldn't happen. You have to understand what's debt ceiling. It is the amount of money which US government can borrow from outside. Of course, if it is going to borrow from outside, it has to pay the interest. Now every time the debt ceiling is going to increase, what US Federal Reserve is going to do is that they are going to issue the bond, and when they issue the bond, it will suck the liquidity from equity market. So that is what is going to happen. And if they suck the liquidity from equity markets are likely to go on the downside, or markets are likely to go for consolidation. That is what has happened in the future, and that is what is going to happen now. Now if you have read the US market, or if you are following the US market, there are news that US Federal Reserve is going to come out with tsunami of bonds. They are going to issue so much of bonds to fill their coffers, right? So that is what we are having the news about. So you can understand that the market is not likely to go anywhere. It is going to be in a consolidation mode. It is going to make a huge swing up and down, but I don't think market are likely to go anywhere. It is going to be a very consolidation market or consolidating market going forward, but there is a time limit. Till when it is going to consolidate is a very important question. And let me go to this thing. If you see, when the market is going to consolidate, since we are saying that the market is going to consolidate, we are having we are going to face a very important data on Thursday, June 13th, 2023, which is going to be the inflation rate month on month, core inflation rate year on year, and inflation rate year on year. So this is going to be a very important data for US government and for Federal Reserve. And after this data is going to come out, US Federal Reserve may increase the interest rate, or they might not increase the interest rate. So now you know that Federal Reserve is following some proxies, and this is one of the main proxies for Federal Reserve to increase or decrease or pause the interest rate. Now what many participants or what market participants are saying that Federal Reserve is likely to pause the interest rate. Now if they are going to pause the interest rate, market may rally, but we retailers, you and me, are the last person to know whether the US Federal Reserve is going to pause the interest rate or not, right? Because we are the retailers, we are the fools in the market who are the last ones to get the news. So be ready for anything. That's why I'm saying be ready for anything. Market may make a high swing or low swing, and you may see a good volatility in spite of India VIX being very down. Even today India VIX was really down, but the market was kind of moving up and down, and it is going to go this way. This is going to happen for few more days, or let me put it this way, this is going to continue till June 13th of 2023. So this is what I expect. Apart from this, that FIIs are also increasing their index short position, which is very evident. In the future index short position, they have increased by 43.2%, which is around 75,630 active contracts still they are having in index short position. So if they try to increase, or if they increase this position, we might see levels of 17,000 or 16,800. I'm just telling tentatively, but who knows, we can go on the downside also. But I believe even though I am saying negative, even though I am saying markets are not likely to move anywhere, but I believe market may not go on below, let me show you the levels. Bank Nifty might not go below 43,000 or even 43,500 is what I believe, and you can see a very sharp negative divergence here. If you see the price action is hitting higher high, but at the same time indicator which we are using is the RSI is showing higher low. So you are seeing a divergence, and market, the probability of the market reversing is also very high. But at the same time you have to remember Indian markets are very retail, very fragile, and they don't want the market to come down, right? They don't want the market to come down. Every time you see a dip in the market, that is the opportunity for DIIs, or that is the opportunity for retailers, or that is the opportunity for HNIs, and they are just pumping the market and bringing the market on the higher side. So with that being said, and with that being understood, we can believe that Bank Nifty, in terms of Bank Nifty, 43,000 is not going to be tested. And in terms of Nifty, what I can see is even though there is a divergence, the chart is very evident that there is a price action is forming higher high. At the same time, our indicator RSI is showing higher low, which is a negative divergence also. But as I told, for Bank Nifty, the market doesn't want to come down, or the participant, even if FIIs are selling, DIIs will come and jump in and they will take the market on the higher side, or retailers will take the market on the higher side. We are in a different world. Indian markets are in a different world, right? We don't respect local cues, but we respect global cues. So with that perspective, that I am saying that the probability of market going down is also very low. At the same time, the probability of market going on the higher side is also very low. We may see a consolidation for a prolonged time in the sense till this inflation rate and core inflation rate is going to come out is what I expect. So till that you can see a consolidation mode. And when it comes to open interest mode, we can see huge number of people have written put options at 18,600, huge numbers, and you can see the open interest scattered everywhere from 18,200 put option all the way to 19,000 call option. People are selling call options and put option left, right and center. That is because they believe that the market is not going to move anywhere and it is going to be very much consolidating. That is why you are seeing so much of open interest in all the strikes, right? This is also one proxy that the market will consolidate going forward. And in terms of Bank Nifty, if you see, today also they have written so many of put option, at the same time they have written so much of call options also. So you can note from the open interest that 44,000 put option is having the highest open interest, and today is a day where people have written 44,000 put option aggressively. And I can tell you this Bank Nifty might not go below 44,000, and we may expire, Bank Nifty might expire between 44,000 to 44,500. So this is what I have learned, or this is what is my perspective about the market, and we have taken position with this in perspective. So we believe that there is going to be a consolidation. So if you are an option seller, or if you are a non-directional trader, you can sell non-directional strategies, and I am sure you can make good money, right? So let's see, hope for the best, and I hope you sell more options, non-directional strategies, whether it is straddle or strangle. You do any non-directional strategies, you are going to make money. So that's it for today. I'll see you in another video. Till then, take care. Bye.